Welcome back to my training series entitled Understanding EMV. We are now in section 2, and in this section we will be covering key terms and concepts. The purpose of this section is just to establish a common understanding, which is very important, especially if you are just starting your journey out in card or in EMV. The card industry does have certain terms and concepts that are unique to the industry, and I think it is important that we understand this properly before we move on to more complex concepts within card and EMV. So this section is logically split into three major components. Okay, the first component is key terms and concepts, and that's going to be the subject matter of this video that you're watching right now. Okay, the next video will cover issuing basics. Well, and the third video under the section will cover acquiring basics. So, key terms and concepts. Let's begin. So, what is a card? Okay, and I think most of you could probably tell me in your own words what a card is. And it's not rocket science, right? So, a card is a physical piece of plastic that we issue to a customer. When you say we, that a bank or an issuer issues to a customer. This card is personalized to the customer, right? And it allows the customer to use the card to access the pool of funds. Now, the pool of funds could be a line of credit, or it could be, a pool of the cardholder's actual funds within a debit account. So the customer will use the card to make payments for goods and services at card acceptance devices, which we also call terminals. And these would typically be a point of sale, if you're making a purchase at the merchant side, or if you're withdrawing cash at an ATM terminal. Okay, so card is meant to be a replacement for cash. Okay, it is safer than carrying cash, and it is more secure because there is some form of verification to ensure that the person making the transaction is actually authorized to access that pool of funds. Okay, and cards may be magstripe, they may be chipped, they may be contactless, or they may be a combination of all of these. A very interesting concept is the concept of virtual cards. Now, a virtual card will, in effect, behave the same as a physical card. The difference is that a virtual card doesn't have a physical form. It's usually a digital card that we store on a device like a mobile phone. So when you want to make a payment in a store, you whip out your mobile phone, you bring up the virtual card within the app that runs it, and then you tap it against the terminal, and basically it would supply card information to the terminal, which the terminal will add to the transaction message, and the transaction will be processed. Okay. And you see these virtual cards existing in various different form factors, not only mobile phones. So you could have a virtual card living on a microchip that's embedded within a key fob, within a sticker, within a bracelet, etc. Okay. All right, let's talk about magstripe. So what is a magstripe? So I'm sure if you pull a card out of your purse or your wallet and you flip it around, you'll see a strip that's located on the upper part of your card, just like the picture that's on the slide here. Okay. Now this is a piece of magnetic tape, and its purpose is to store small amounts of data. So during a magstripe transaction, what happens is when you slide the magstripe card through the groove on the side of the terminal has a magstripe reader. And so the terminal will basically take all of the information that's stored on the magstripe. It will add it to the transaction message, and it will process the transaction. What this effectively means is that in a magstripe transaction, once the card has been swiped through that groove, the card no longer plays a role in the transaction. Okay, it's delivered the data to the terminal, and the terminal now drives the transaction forward. Historically, these magstripes used to be dark brown in color, but you see various shades of brown. You see them in black, silver, blue, etc. The color isn't important. What's important is the fact that the magstripe is used to store data that is read by terminal during a transaction. Okay, so let's evolve from magstripe to a chip card. Okay, so what is a chip card? Okay, so a chip card is a card that has a microchip embedded in it, right? And it's called by many names. So you could be sitting in a meeting and you could have one person referring to a chip card and another person referring to an EMV card, another person referring to a smart card, and then you'll get your really smart guys who start talking of ICC cards, integrated circuit chip cards, and basically they're all talking about the same thing. So the chip card or the EMV card is called by all of these synonyms, and I'm sure there are smart Alex out there who will probably uh, give it new names that I'm not aware of. Okay, but the important thing to understand is this: you have a card, and on the face of the card, you'll see that there's a metallic plate, right? It's oval or square or rectangular. This is the contact plate, and under the contact plate you have the chip. Okay, it's usually positioned in sort of the same area for all cards, towards the left, or a certain distance from the top and from the left. And the reason why it's put in a specific place is that this is to allow the card to be used, globally. Doesn't matter which region of the world you're in, doesn't matter what brand of terminal you're using. The card has to have the contact plate in more or less the same place so that the transaction, so the terminal can power up the card and basically interact with the card. Okay, let's move on to PAN, or primary account number. So what is a primary account number? The primary account number is, as you can see, what's highlighted on the picture above there. Okay, it's, you may refer to it as a card number as well. And this is a unique number that is generally displayed on the face of the plastic card. Right, so please bear this in mind. PAN numbers are unique. They are unique to the card, and which means they are unique to the person or to the card holder holding the card. A card number or primary account number or PAN relates directly to an account held by a customer at a bank or a financial institution. Okay? It's usually not the same number. So what you have is when you open up an account with the bank will create an account, and that account, which is a pool of funds, will have an account number associated to it. The bank will then issue you with a card, and the card has a card number or primary account number or PAN. And this PAN is different from the account number. On the bank's host system, what you will find is there is some sort of mapping involved that will map this card number to that account number. So when a transaction comes online, it will come online with the PAN, okay, and the backend system will use the mapping to associate the card to the account so that it can debit the funds of the relevant linked account. PANs can vary in length, right? So usually between 14 and 19 digits long, but we see that the most common format, well, in my experience anyway, is that PANs are usually 16 digits long. Right, let's move on to BINs, or bank identification number. So what is a BIN? A BIN is the first 6 digits of the PAN that we just discussed. Okay, the BIN is supplied to the bank by the card association. So let's just take a step back. A PAN is unique to a card and is unique to a card holder. A BIN is unique to an issuer, to an issuing bank. Okay, and so the process is that, let's use an example, right? I work for Bank ABC, and Bank ABC wants to go to market with a platinum card product. And so we approach a card scheme. Let's use Visa in this example. And we basically register and purchase a BIN range from Visa. Okay. So so Visa generates the BIN, and Visa will allocate the BIN to Bank ABC. Okay. So this is a way for Visa to identify, to which issuer does a particular card or card holder belong to. So I'll give you an example. I live in South Africa, and I've got a Visa card issued to me through Bank ABC. And I go traveling. Let's assume I'm off to New Zealand. Okay, and in New Zealand, I decided I want to buy a cup of coffee, and I'm going to pay for it with my South African Bank ABC issued Visa card. Okay, when I present the card to the terminal, what happens is the transaction will route online to the acquirer, and the acquirer says, "Hey, look, this card doesn't belong to us." So it will send it off to Visa, and Visa will identify the bin and look up the association and say, "Hey, look, here's the bin. It's bin 123456, and we know that we issued or we registered this bin into Bank ABC in South Africa." So then Visa will route that card transaction to Bank ABC's systems in South Africa. Okay. And so that's the primary purpose of the bin. It's to identify the issuers so transactions can be routed there. Okay. Please bear in mind that some of the card schemes have started issuing bins that are now 8 digits long, and you'll find that over the next few years this should become a lot more commonplace. Let's talk a bit about PINs now. So a PIN is a personal identification number. And what a PIN actually is, it's a secret number that's issued to a customer or selected by a customer. And this secret number is used to make card transactions secure, right? It's a way of identifying that the person using the card is actually the only person authorized to use this card. And the reason for that is that a PIN is always meant to be private. The bank issuing the PIN doesn't know what the PIN is. Only the cardholder to whom the PIN has been issued or who has selected a PIN will know what the PIN is. Okay, which is why it's very naughty of you if you share your PIN with your friends or your family. Uh, this PIN actually, legally is a digital signature which can prove your presence during a transaction. Okay, which is why you'll find that the terms and conditions of a card that you receive from a bank will always tell you not to share your PIN with anyone. PINs may vary in length, right? But usually we see PINs of either 4 or 5 digits being issued by issues, right? Uh, Surprisingly, the maximum length of a PIN is 14 digits. Okay, but human beings can't remember such long numbers. You'll find that PINs are very rarely longer than 6 digits. Uh, I think if you look at telephone numbers which are 10 digits long, we struggle to remember a 10-digit telephone number. So for something as sensitive as a security mechanism for card transaction, the risk of you getting it wrong because of a longer number are much higher. So it's always best to keep the PIN number uh, to a level that is easily usable by the majority of the population. Embossing. So what is embossing? Okay. So embossing is the process where we punch card and customer details into a card so that the numbers and letters are raised above the surface of the card. So I mean, if you take a credit card and you run your finger over it, you'll actually feel where the numbers and letters are raised. The surface of the card feels bumpy, right? So the card associations they mandated that all credit cards must be embossed. Okay. And the reason for this actually predates Magstripe, right? So back in the day, in certain regions of the world where connectivity was an issue, as an example, where the POS devices that we understand or recognize today, weren't readily available. Card transactions were processed manually. And what this meant was you'd have something that we fondly call a zip machine here in South Africa. So it was a large square device, a tablet of sorts. And when you wanted to process the card transaction, you place the card face up on the device. You put a special transaction slip that's carbonized, sorry, on top of the card, and then you'd have a slider that you would run up and down, which would press the paper onto the raised lettering of the card, and that would imprint the card details onto the transaction slip. And that transaction slip was then bundled up together with the rest of the transaction slips at the end of the day, and it was taken to the bank, where the banks manually captured and processed this. Okay, so we don't see too many of this anymore. So it's possible that the card schemes could slowly stop mandating the embossing of credit cards. I'm not 100% sure at this point in time. All right, let's talk a bit about cardholder. So who is a cardholder? A cardholder is a person who has an account with a financial institution, and to whom a card, and be it a debit card, a credit card, or check card, to whom it's been personalized and issued. So basically, it's the person who's authorized to use the card. And if you're looking at personalized, embossed cards, credit cards, a cardholder is a person whose name is captured on the face of the physical plastic. Okay. Let's talk about issuers. So who or what is an issuer? The issuer is the bank or organization that issues a payment card to a cardholder. Okay. These cards may be branded through one of the major card associations, and what it means is, on a card issued by Bank ABC, you'd see the Bank ABC logo somewhere on the face of the card. But what you will also see is, let's assume that it's a Visa card, so you'd see the Visa branding on the card as well. Okay. The important thing that you need to understand is that the issuer has a direct relationship with the cardholder. Okay. So we've been talking about card schemes, card associations. What is a card scheme or card association? Okay, so these are the companies that define the standards for payment cards in line with their own specific product offerings. Now, we know these entities as Mastercard, as Visa, Diners Club, MX, JCB. There are a few more, and these schemes could be operating at a global level, or they could be operating domestically at a local level. Right. I think for the purpose of this training session, we will focus on the international card schemes, and specifically Mastercard and Visa. Okay, so these card schemes could issue cards directly to card holders. I mean, a typical example is Discover or Diners Club, or they could have banks issue branded cards to the bank's customer base. So, for example, Bank ABC would issue a Visa card to its customer. Okay, we've already spoken of the examples, but there are several more throughout the world. Okay, so what is a merchant? A merchant is an organization or company, or even a person who's providing the cardholder with goods or services. Okay, so it could be a supermarket, it could be a little corner shop, it could be an electrician, it could be a plumber, an insurance broker, an online, an online shop. Any sort of entity that provides goods or services would be deemed to be a merchant. And of course, merchants may offer face-to-face service or allow purchases through an online shopping portal. Right, let's talk about acquirers. So, what is an acquirer? So, an acquirer is a bank that would partner with a retailer or the merchant to process payment card transactions on their behalf. So, I mean, look, you have a shop that sells clothing. Their key business is clothing, right? They are not a bank, they are not a financial institution, so they don't have the technical know-how or the infrastructure to be actually routing transactions between banks and between switches. So what happens is your merchant would contract with a bank. So that, for example, go to Bank ABC and say, hey, look, Bank ABC, I'm signing a contract with you. I'm opening up a bank account in my shop's name, and I want you to be the acquirer. So what this means is every time a customer comes in, and it doesn't matter which customer, whether it's a Bank ABC customer, it's a Bank XYZ customer, for all the card transactions that they process on my terminal, I want you, the acquirer, to receive the transactions, and then I want you to send it off to where it needs to go. Okay, so in a nutshell, that's basically what the purpose of an acquirer is. Okay, and then the acquirer also gets involved in terms of settlement, so the movement of money between the various, between the cardholder and the shop, and the various banks and parties involved. Okay, important thing to note: the acquirer has a direct relationship with the merchant. So similar to how the issuer's relationship is with the cardholder, the acquirer's relationship is with the merchant. National switches. So a national switch is the switching and clearing house that serves as all of the registered issuing and acquiring banks in the country. So look, in South Africa, we have Bank South Africa. Namibia has NamSwitch. So, I mean, other countries in the world may have their own localized national switches that sort of connects the various issues and acquirers in the country. But you find that in some regions, MasterCard or Visa would also play that role within that country. Yeah, so as I mentioned, MasterCard, Visa, or the other card schemes could also route both domestic and international transactions within the country. Right, let's talk about the term authorization. And for those of you who are based in America, you'll notice that my slide tries to stick to the English language standard. So authorization has an S. The only times you'll find the American spelling applied is where autocorrect has forced it on me. Okay, so an authorization is the process of validating whether a transaction may be approved or declined. Okay, so basically we are processing a transaction. It goes back to the issuer. The issuer says, let's come back with an authorization response. And the authorization response could be approval, could be a decline, it could be, hey, let's call the customer and see if everything's okay. And this would and the outcome of this would be based on several factors, including an account status, suspected fraud, available funds, etc. Settlement, basically, let's move money from point A to point B. So uh, there are different types of settlements. A customer settlement. So I'm a customer. I bought coffee in New Zealand. At some point, I need to move the funds out of my account because I'd use it to purchase coffee. Merchant settlement. So the funds that moved out of my account would need to actually end up in the merchant account at some point, and this would happen through the settlement process. And then you have your interbank settlement, and this is movement of files between issuers and acquirers. There are various concepts in terms of gross and net settlement, which I won't go into, but basically settlement is all about the movement of funds uh, between entities and into and out of accounts. Let's talk a bit about single messaging now. We starting to get a bit more technical. So single messaging, so some card transactions, right? So if you look at the historic debit card transactions, for example, your old Maestro transactions, those are processed as single messages. ATM transactions are processed as single messages. And what this really means is that when you have a transaction, uh, all of the information required for both authorizing and settling the transaction are supplied in that one transaction. All right. Uh, what you should know, the important takeaway from this slide is single messaging only supports online transactions. Okay, you cannot have offline single message transactions. Let's talk a bit about dual messaging, which is the other side of the messaging coin. So unlike single messaging, dual messaging has two distinct legs, and here we're saying we're separating the authorization leg from the settlement leg, right? So we're separating the leg where we decide whether to approve or decline a transaction with the leg that moves the funds into and out of accounts. Right. So the first leg is the authorization leg, and it's obtained from an issuing system to process a transaction request. Uh, okay, and when that authorization is obtained from the issuing system, right, the funds in the account are not yet debited at this point. It's booked, it's reserved to be cleared at some point, but at that point of transaction completion, it's simply just reserved. Okay. Later that day, what would happen is that the terminal would bank. Okay, and in that banking, it would send up a whole lot of settlement messages, 220 messages, and these messages contain the balance of the information required for the bank to proceed with debiting the funds, the reserved funds of the account that it applies to. Okay, yeah. So Once again, the most important thing to understand here, uh, dual messaging supports both online and offline transactions. Again, and this is the key benefit of dual messaging, is that where you want a product to support uh, offline transactions, you would have to employ a dual messaging approach to it. Okay, so we've come to the end of this section, and thank you for bearing with me. Uh, we will we will close this video off now, and I'll catch you guys in my next video.